digging a bit deeper this morning with Piper Sandler's Harsh Kumar, who raises his target on Broadcom from 200 to 250. Harsh, great to have you back. Happy Friday.
Thank you.
The print itself didn't feel like some blowout, but I guess it's these numbers about 26, 27. Is that the reaction today?
The most important thing in the earnings call was the visibility that Hock Tan, the CEO of Broadcom, provided through 2027. So what you have effectively is a month ago, NVIDIA came out and talked about a very good prospect for 2025. A week ago, you had Marvell come out and talk about very good prospects through 2025 into 26. And now you have Hock Tan coming out and talking, or Broadcom coming out and talking about extremely good prospects through 2027. With CapEx rising, he's talking about a SAM number that's potentially rising 400, 300%. And that makes investors feel extremely comfortable about the AI CapEx spend. And that's what's going on here.
There's been some discussion this morning about how the picks and shovels element of this story continues to work, but the incremental story, say, regarding Adobe, certainly this week, or Oracle, is still less certain. And hence the payoff, the eventual ROI, is still less certain. Would you agree with that?
I think the dynamic that most people forget is that the CapEx that is being spent into AI is being used to offset, or will be used to offset, a lot of the OpEx. When you think about chatbots that are helping out, displacing effectively call-in operators or call-in centers, I've heard of companies using ChatGPT and other mechanisms to check the code that they write. And I've heard of companies using such programs, generative AI programs, to write the actual code. And what I'm hearing is the checks are pretty good, the testing is pretty good, and the code is actually pretty good. When you think about those kind of dynamics, you're thinking about a massive amount of cost that could be taken out of the system for an ongoing business. And that's where the ROI lies. And of course, you have the cloud providers, which will show you, Meta will show you videos that you like a little bit faster, and Amazon will sell you stuff or recommend things to you a little bit faster. But the real enterprise will save money through basically writing code, saving code, cutting out customer service people and things of that nature. That's where the real return will be.
Can you just explain, Harsh, to a layperson, so the AI chip opportunity is what is so exciting here for these stocks and what leads to 20% moves? Where Broadcom sits and who it competes with? Is it Broadcom and Marvell? Because I think AI chips and I think NVIDIA, AMD. So where does Broadcom play here?
Okay. That's a very interesting question. You have to break out the GPU market into two pieces. One is your plain vanilla, very much Intel-like chip that does a lot of different things, and you can buy it off the shelf, and you have software available, and you have a lot of help available from vendors to be able to work this. So this is for not just sophisticated people. Let's say, your typical enterprise or a medium-sized business. That's what NVIDIA does. That's what AMD does. And then you have guys like Broadcom and Marvell that will make you a custom chip that's 20% cheaper, 30% faster, or 20% faster, takes up 25% less power, but there is no technical help. There is no software provided. You basically have to know what you're doing. You have to be a DIY guy. So you have to be a Google, you have to be a Meta, you have to be a Microsoft or an Oracle to be able to use those chips. Now, these chips are not meant for everybody. There has to be, each chip costs something like $400 or $500 million to make. So they're not making these chips for a 5,000 unit order. They're making these chips for 250, 400,000 unit orders. And so the customers are chosen appropriately. But that's roughly the split. Broadcom makes custom GPUs, which they like to call XPUs, and so does Marvell. And then the other side is AMD and NVIDIA.